Welcome to TradeTheNBI.com. This is John. This report is for the 15th of October, and moving into it, well, it's been a lovely October, and we're only halfway through it. So futures are starting down significantly. Again, we got right back up to the cap range here at the 2767, which happened to be that positive extreme from before, and we're kind of in between the range of the two at this particular point. We started to see little activity from midterm buyers here coming in, but still nothing from a long-term buyer standpoint, and certainly a little bit of an improvement from short-term buyers, but they've kind of like used up a lot of everything they've got to hold things. So without much left, you'd have to see a spike way up here to propel this thing in any way, shape, or form, or wait to see our orange dip, and that would give us a clear indication the relationship has changed and that bulls actually do have more inflow coming in. You can see we're still below the red line, though almost outside of it. Almost. But almost only counts in what? Hand grenades and horseshoes, as they say, right? The NQ performed much better. You can see that was that turnaround I was talking about, but it needed to get all the way up to this 73 range up here, 2/3 of that move in order to really capture more of a bullish push, though you can see the orange much better situation on the DOC, the potential. But if this pivots up before you get green above orange, no, it's not going to survive. So at this particular point, this is not great. It's just a short cover buyback, looking for a little higher price. Maybe they can do it again. The euro right at the top side of the bound, the other side of it's all the way off the screen here at 111 range. It's still holding up pretty well despite, it's just a disaster for European budget. The Italians decided that they're going to take their demands straight to the EU for this 2.4% budget deficit stuff. And, you throw in the situation that was taking place in Turkey along with Greece. There's a contagion, which I think is what you saw in some of the U.S. things, that, to just claim that it's all, trade war or whatever. That really hasn't caused any impact. It's the raising of interest rates that have really been a problem, because it's really designed to stop the growth without really any proof of significant inflation to have to hedge against. In fact, it's going to create its own, because it's already skyrocketed the deficit and increased home borrowing, which is going to shut down real estate. Not that it's been extremely hot. It was doing well, but this will certainly put the brakes on it. And this is the thing, this has happened back in 2008 with Bernanke and that too. It was that just one extra quarter point was too much. It was that straw that broke the camel's back that created the entire housing crisis, and clearly they haven't learned anything from it. So, hey, you're going to repeat the same things. TLT, again, already overdone, because everyone realizes that rates are going to continue to go higher, and when that yield rises, you're going to have to lower the price tag in order to justify the yield. So it works invertedly. USO, which is oil here, not bad. You retrace the positive extremes, filled them in nicely, that was fine. So again, above the ABM, becomes pretty straightforward. This particular point, you don't have any buy reset. You're still within a nice DOC spread from the break of the ABM yellow here at 1560. Don't see a cover point at this particular point. However, this is not horribly bearish, and you're just breaking the zero. So you would expect that that's going to continue, but rebound of short-term buyers here with steel has been completely reset, so they do have fresh powder should they want to drive it higher. It's a question of whether the Saudis really increased their output versus not. I know there was some conflicting detail, even though they said they were, that they hadn't, and blah blah, nobody cares. Gold was due for a pop for a while here. We've seen the reset, the improvement, higher peak pivots at the same lows, and then the orange, of course, dipping below was the catalyst that really drove it. It's still going to have some difficulties, because I think oil is still the trade. We might start to see some transition in that. It really depends on how much of this we get, because look at how much I have to shrink this in order to get a full day's action into it. It really shows it because this is the day line right here, and this was the start of futures right here, and makes it hard to see anything, so we want to expand it to where we can actually get a visual, because it's just a repeat of the same things that we've been going over for a while. We had just more and more of a clear indication. So we had this early move up in futures, all positive extremes, and so they set these beautiful little levels that we marked down with our nice little magenta horizontal lines, and you have just the opposite develop when the short signal comes in. So as we get the DOC spread and the steel comes through, which sort of ended the short move at this particular point, lets you know that you're about to see a little bit of a bounce, which is exactly what happened. I love it when it does that. But it does set up the next opportunity when you get, clean signals, spikes where you have green beginning to cross lower, you got red at least moving up towards the zero. It doesn't happen until a little bit later here. You get a couple of false signals. Not a big deal because you're still relatively at the exact same price each time one of these spikes up and creates a miniature short. This one wasn't so good because you still had green over red. This one a lot better because green was already underneath. And you can see that happens right about there. You got a couple of bars that went right against you. You end up with the exact same thing. You averaged it in. Doesn't matter, still ends up making the move back down to the lows again, and then you repeat the same situation going here. Green crosses below, just at the same point you get the short snake. The next bar literally happens right there, and boom, cascade back down. And then it was just wild back and forth because you ended up going back down to the lows. I mean, these were great swings to trade. What interests me in something like this is that when I get these dips, oftentimes I'll cover a portion of it, expecting my pop-up, and as soon as I get my next signal, I'm attacking it, because unless I get my steel resetting below or all the way above that 13.5, I know that this rally isn't going to last. So whatever it's doing is just a temporary thing, and it's just a matter of picking a zone that works best based on which short signal comes in. Whether you're taking this snake that develops right here, the one a little bit further on, they're all the same thing. It's just a question of how much delay you have before the final breakdown. And it didn't take long in this particular case because these bars were going by pretty fast given the way things were trailing. And sure enough, you still had your set targets. You see, this is the beautiful thing. It didn't change. The 56, the 40, they're still sitting there. And the question is, do you have the patience to either wait for and build up enough position going from the higher side of it and letting that fill, in which case you can take them at that spot, or wait until you get that dip below the orange right down there towards the bottoms, and you cover at that point and look for your next boost. In this case, it was very short because you got right over the 23 yellow dot warning that you're already had too much, and then the orange moves above. And fortunately, in this case, that bar was pretty fast. You had to be quick on this one because it broke down pretty darn quick. And then from that point, we cascaded to fill the final positive extreme all the way to the lows, produced the beautiful bar. And you can see it's again and again. It's like always we show the bottom with the beautiful step downs coming off of green. Don't usually get a rally that comes off of a dip below the red line that's purple like this that spikes significantly. It can happen, but it's not common because usually you get some kind of a retrace that pulls you back in. And look at the interesting dynamics. So we ended up with all this time with the steel above, and then miraculously it resets, right over in here, just right around the 23, gets below the red, and it chops around a bit. But what you've done though is you've reset to say that, hey, short-term buyers are no longer out of position in this particular case. It's been reset because you have this long period where steel was always above, and it really is problematic for rallies. But after the reset, fights back and forth for a little bit, and then boom, starts here. Well, it was pretty quick because you started with the early warnings where cyan dipped below red just for a brief minute, retraces, but you can see the shakeout improvement was dramatic. and you're getting back towards positive. And then sure enough, you get the gold candle, and then cyan dips below red and boom, takes off all the way to the end. However, again, it's interesting because you get the positive extreme pretty close to the same spot as before. So in this particular case, we would just lower it just a little bit for this positive extreme. So you have 43.50 becomes another downside target after the significant pop. And a whole range of them developed in between here, but you had this pretty consistent steel remaining below, going through. Then you ended up with a very clean DOC spread right here up at the ABM value, which, if we go ahead and take a look at that, was 27.74, well before the close of the day. Dipped down, obviously the steel crossed the red, that warning that you're going to get a little bit of a pop from there, and it actually overtook the orange briefly, and then the little dip right as futures opened was an interesting little setup right at the beginning of it, and then orange popped immediately as it started to decay, and it pretty much fought back and forth. I know a lot of them were talking about the president's comments, this, that, and the other, but some of these positive extremes needed to get filled in. There's still the much broader one that was the main catalyst, which was all the way down at 43. So that's still another 10 or 12. That would be a minus 26 move. Looks like we've come back from part of it. Don't know if it'll get down to that one just yet, but it's there. So it makes it easy to identify what's actually taking place. So that's the long and the short of it for now. As always, though, trade well. We'll talk again later.